welcome. You're watching Buy Now, Sell Now from ET Now SBI Live Studio. I'm Kavita Thapliyal and with me is my colleague Srishti Sharma. And next 1 hour is going to be all about your stock-specific queries. So all our viewers, if you've just tuned in, note down our WhatsApp number that's flashing on the top of the screen. Send us your stock-specific questions. Write the name of the stock, the price at which you've bought it, and for the time frame that you want to be in the stock. But then let's quickly talk about the market. And Srishti, it's definitely below 25,800, a very crucial support level. Today, again, it's no Friday chair for the market. And once again, we are looking at major indices dipping down, while mid-cap and small-cap, the broader indices are trying to hold on to it, but still the market breadth looks very weak today in the Friday's trade. Also, if we look at sector-specific performance, auto are slightly doing better, 0.5% up as far as the index is concerned. But then look at IT. PSU Bank almost doing better, close to 1% index-wise up. But then look at pharma, again down. FMCG, private bank and consumption. Overall, if we look at even defense, that's marginally up. But having said that, the market breadth really looks weak. Let's also look at some laggards. Cipla almost down 2%, NTPC almost 1.5% down. Eternal, HDFC Bank, Hindalco again down more than 1%. But then what's on the gaining side? Aisha we can see doing better, almost up 2.5%. Hero Moto, ITC and Bajaj Auto doing good, almost 1.5%. So Srishti, we can see an impact of stock-specific, result-specific actions also on the market today.
Well, indeed, Kavita, and it's been a news flow heavy day. Totally. And let's go across and to the big news and the development over here, wherein market regulator SEBI has issued a circular on the implementation of eligibility criteria, primarily impacting the Nifty Bank Index. Let me take it across to my colleague Ankur, who is joining us with more details. Take it away, Ankur.
Yes, the constituents of Bank Nifty, Fin Nifty is going to change, and why it is going to happen? Because SEBI has come out with a circular on non-benchmark indices. What does it mean? The circular will apply to existing non-benchmark indices such as Bank Nifty, Bank X, as well as Fin Nifty. What is SEBI saying? Currently, there is no minimum number of constituents for non-benchmark indices, meaning the constituents are decided as per the exchange. But now, what has been suggested is minimum 14 constituents are mandatory for all non-benchmark indices for derivatives, and top constituents will be capped at 20%. Currently, there is a situation, especially in Bank Nifty, where it is exceeding 28%, and we can take example of HDFC Bank there. But SEBI is also mandating that combined weightage of top 3 constituents will be capped at 45%. And currently, if you take the balancing, it is almost close to 60% of the top 3 constituents in Bank Nifty. All other constituents to follow the descending weight structure. Bank X and Fin Nifty will comply this order in single tranche. There is a timeline now which is given, and Bank Nifty will comply in 4 tranches because the rebalancing is slightly longer. Therefore, the regulator has given more time. Now, the top constituents weight will be gradually reduced to 20% for Bank Nifty, and this will happen in 4 tranches. Fin Nifty is set for December 31, 2025. The changes will be applicable after that, and for Bank Nifty after 31st March 2026. All in all, it means by the next year, you will see changes in the constituents of Bank Nifty, Fin Nifty and Bank X.
All right, so that's an important update. New rules for Bank Nifty. Thank you so much, Ankur. But then let's move on and let's talk about companies and their Q2 results. And now we are joined by Rajesh Sharma, MD, Capri Global, to talk on the Q2 numbers. Strong performance for Capri Global in this quarter. Hello and morning and welcome to the show. You've delivered strong AUM growth of around 40%, so congratulations over there. But then given the high base now, how sustainable is this growth trajectory, sir?
So yes, our aim was to target 30 to 35% growth for next years, and in line with that, of course, the demand was very strong and led by expansion of branches. We added about 86 branches in the last quarter. So back of that, plus operational efficiency have increased the productivity of the team, and that has resulted this growth. We believe this year we should be able to close the year a growth about 40%. But on next year basis, our guidance continue to remain to reach 50,000 crore AUM by FY28.
All right. Morning. This is Shrishti also joining in, but give us some sense about your margins as well, because margins have been quite healthy for you. What level of margins do you see to be sustainable in the medium term?
So our target is to continue to remain in a 4% ROA and deliver a ROE in the range of about 16 to 18%. And this will be supported, supported by uh, a fee income. This year, if you see, we generated a fee income about 200 crore rupees, which is almost 29% of total income. So from insurance, car loan distribution, and co-lending operation, uh, this fee income is quite supportive. So we believe that this margin is going to be there, and plus our technology investment, data science capabilities also enhancing our productivity, and that is helping us to keep our cost income ratio down. If you see, cost income has come to about 49%, down from 64%, and further we believe that we will be able to bring it down to almost about 40% in next 1.5 years.
Sure. Mr. Sharma, you've maintained strong asset quality so far. Now, do you foresee any credit cost concerns ahead?
And we don't see, if you look at about 38% portfolio is about gold, where gold loan prices are also supported. At the same time, gold being a very liquid security, you are able to recover every penny out of them. And similarly, construction finance is doing well. MSME, affordable housing being, we are 100% in collateralized secured lending. We don't see any much surprises in the slippage and the asset quality.
All right, and along with that, are there any emerging risk or early warning signals you are currently monitoring in the book?
I think it's a very good question because a lot of people are talking that there is a growing concern in MSME book in the sector, but I believe that is more on the unsecured side. So far in our collection efficiency, we are not seeing any sign or slippage of that which give us a early warning signal. So I believe in the segment we operate, which are either collateralized by property or the gold, so far there is no sign emerging where we need to slow down or keep a check.
Sure. Let's talk about the gold loan portfolio and its behavior out here, especially in the light of recent correction in gold prices. What's your take?
The gold loan portfolio is doing very well. If you see that the LTV norms are regularized by Reserve Bank now in a more clear terms. So 75% LTV. So ultimately, we come at a risk when the gold loan prices within a span of 4 months fall more than 15%. And at individual level, where the every borrower loan size about 1 lakh to 1.5 lakh rupees. Even though recovery comes, we immediately have the system in place where we send the SMS trigger that LTV is breached and start recovering. We do not wait till that 15% goes and then we come in the portfolio, commit the risk. We start recovering the amount, and every loan account it come in the range of 3 to 5,000 rupees. So I think that way, being portfolio very granular and short-term duration of the gold loan, this price fall risk is not that concerning.
All right, and along with that, 75% is your loan to value ratio. How are you managing it amid the price volatility?
So 75% loan to value would mean that still you have 25% cushion. And assuming that there is a bullet repayment case and even you are landing at 15%, in 6 months' time, 7.5% further will be accumulated. But still, you have a cushion of another 17.5% in that loan. And you don't wait till, as I said, you don't wait till last date. You start recovering the moment LTV breaches. You start recovering from the customer 3, 4, 5, 7,000 rupees. So that way, it is very well documented. Plus, customer is made aware when they give the loan, and there's an adequate system in place to send the system-based alert and recover from the customer. So we really don't see that is any concern.
All right, I think that will be all. Thank you so much, Mr. Sharma, for taking time out and talking to Eat In Now today. Thank you so much. And with that, it's time for a short break, but then
You live from SBI Live Studios, and viewers, this is the show wherein you get a chance to ask all your stock related queries. It's a simple process. Tell us the name of the stock, your name as well, and the time horizon you wish to stay invested for, and we'll try to take as many queries as possible. And today onto the show, we are being joined by two of our very special experts to help you better. On the fundamental side, Narendra Solanki is with us, and on the technical front, we have Kunal Bothra. A very good morning, gentlemen, and thank you so much for your time. So many queries are already trickling in. So the first query that I have, Kunal, let me take it from you. This one is coming in from Shaurya from Gurgaon. Holding 73 shares of Bharat Forge at a price of 1,298 rupees. What's your outlook on this one? Good to hold on or keep selling this particular stock? His time horizon is for 6 months.
Good morning. So I think for Bharat Forge, I would suggest to hold on to the stock as of now. You know, over the last 12 months or so, the stock has been more of an underperformer. But you know, the recent charts over the last 1 or 2 months, the improving news flow for the stock, especially on the the political side, I think could probably indicate that we may be looking at a point where the stock breaks out of this major zone of underperformance. And if that happens, then I think Bharat Forge, historically has done exceptionally well. So I think in that context, the stock could perform very well going forward. So I believe that the major drag or the underperforming nature for the stock price trend, that's behind. We could be looking at a zone where the stock would come back into a strong outperforming point. In that sense, I would look at potentially, say, a 1500-ish kind of a target for Bharat Forge if you are an investor with a time frame of at least 12 months plus. So I would suggest a hold.
all right, hold for 12 months plus and 1500 target for Bharat Forge according to Kunal. But then let's move on, Narendra. This question is from Aman, and he bought Moscow Dock at 2807 and PNB Housing at 937. He wants to know if it's a hold advice, then for how long you're recommending that, with what targets?
Yeah, good morning. As far as Masdao Dock is concerned, we do not have active recommendation, but yeah, since it is into a defense space, he can continue to hold because we are very positive on the defense space per se. And looking at the business and operations of the company, these kind of companies generally have a very lumpy kind of a nature because of large orders, and execution pace is also spread across several years. So if he has a time horizon of around 3 to 5 years, then he can definitely continue to hold the stock.
Kunal, any specific targets in mind for Moscow Dock? He bought at 2807, PNB Housing 937.
See, I think both of the stocks I would suggest a hold. Mascot Dock is in slight underperforming zone, but then I'm very bullish on the defense counters, and not just from a short-term play, but even from a medium to longer-term play. Mascot Dock apparently has gone through a zone of underperformance, so which means that the stock has high potential to make a comeback. If that happens, then I would look at, say, closer to 3,000, 3,100 as a very immediate target for the stock, and by that I mean potentially, say, a time frame of 1 to 3 months approximately. And it's a very high beta name, and we've seen historically also that when stocks like Mascot Dock, GRSC, etc., when they go into a breakout zone, we've seen many a times that these stocks have capacity to climb up even 20-30% in a short span of time. So I would expect or anticipate something similar to happen for the stock. I would suggest a hold. Even for PNB Housing, the near-term charts are still suggesting that the stock seems to have a decent uptrend in the making. 982,000 is where I would peg the near-term targets for PNB Housing.
All right, so that's about PNB Housing. Let's watch out for that. But as of now, the markets are indeed in the red, wherein both the benchmarks are down. But up next, an exclusive roundup of week's key developments from Maharashtra in our Maharashtra 360.
From deep-sea transformation and natural farming to backing rain-hit farmers and taking development to every corner of the state. Here's a look at what's making news this week across the country's largest economy in our exclusive Maharashtra 360. Union Home and Cooperation Minister Amit Shah inaugurated 2 state-of-the-art deep-sea fishing vessels at Masgao Dock Shipbuilders, Mumbai. The event was attended by CM Fadnavis, Deputy CMs Eknath Shinde and Ajit Pawar, and Fisheries and Ports Development Minister Nitish Rane, among others. The vessels constructed under the Pradhan Mantri Matsya Sampada Yojana are set to revolutionize Maharashtra's marine fisheries sector by promoting sustainable practices and enhancing the livelihoods of local fishermen.
आज भारतासारख्या आपल्या देशाला इतक्या मोठ्या प्रमाणात एक्सक्लुझिव्ह इकॉनॉमिक झोन म्हणून जो काही जवळपास 23 लाख चौरस किलोमीटरचा सगळा एरिया मिळालेला आहे की ज्या ठिकाणी आपण एक मोठी मरीन इकॉनॉमी तयार करू शकतो, परंतु अशा प्रकारचे डीप सी फिशिंग व्हेकल्स ट्रॉलर्स वगैरे आपल्याजवळ उपलब्ध नसल्यामुळे आपण आतापर्यंत ते करू शकत नव्हतो किंवा लिमिटेड लोक केवळ ते करू शकत होते.
The deep-sea fishing vessels are equipped with advanced navigation systems ensuring precise and safe operations even in distant waters. Enhanced safety measures have been integrated to protect crews during long sea voyages. Improved storage facilities allow for better preservation of the catch, maintaining quality from the sea to the shore. Digital traceability systems enable real-time monitoring of fish catches, supporting sustainable fishing practices. The Maharashtra government continues to move swiftly to support farmers ravaged by heavy rainfall and floods this monsoon. Relief and Rehabilitation Minister Makran Jadhav Patil announced approval of yet another tranche of compensation. Not just that, the eligibility criteria has also been extended. The state has sanctioned 648.15 crore rupees to compensate farmers whose crops were damaged this monsoon. The relief cover has expanded to losses up to 3 hectares from the earlier 2 hectares. In total, around 8,139 crore rupees has been committed for Kharif season damage relief. CM Fadnavis announced that Maharashtra is poised to emerge as the country's next hub for natural farming, a move aimed at rejuvenating the state's soil health, cutting down input costs, and transforming the future of its agriculture. Speaking at a conference on natural farming at Raj Bhavan held in the presence of Governor Acharya Devrat, Deputy CM Eknath Shinde and various other MPs and ministers, Fadnavis said the time has come to shift away from chemical-intensive practices that have drained soil fertility and burdened farmers with rising costs.
मी राज्यपाल महोदयांना आश्वस्त करू इच्छितो की आपल्या नेतृत्वामध्ये मोठ्या प्रमाणात नैसर्गिक शेतीचं मिशन आम्ही हातामध्ये घेऊ. मोठ्या प्रमाणात गटांमध्ये आम्ही नैसर्गिक शेती ही त्या ठिकाणी नैसर्गिक शेतीचे गट तयार करून त्या गटांच्या माध्यमातून ती आम्ही प्रत्यक्ष अस्तित्वात आणू आणि त्यातनं आमच्या शेतकऱ्यांच्या जीवनामध्ये परिवर्तन आणूच.
Maharashtra aims to bring 25 lakh hectares under natural agriculture. The CM also announced that a natural farming mission will be launched. The plan focuses on sustainable rural development and conserving native cow breeds which provide essential resources like compost and gomutra for natural farming. The government is providing training, awareness campaigns and technical support to farmers.
ये भी लोगों में लगता है कि ये प्राकृतिक खेती हम करेंगे तो उत्पादन कम होगा, लेकिन यही तो लोगों को समझाने की आवश्यकता है और अवेयरनेस की आवश्यकता है, प्रचार की आवश्यकता है.
Deputy CM Ajit Pawar visited Pasrani in Vai Taluka to inspect the Shahid Krishna Rao Sable Kala Smarak and participate in the groundbreaking ceremony for a modern memorial dedicated to the legendary folk artist. The new modern memorial will provide advanced facilities for artists and trainees. The memorial is designed to strengthen Maharashtra's rich folk art tradition and ensure that Shahid Sable's legacy is passed on to the future generations. During the event, the Padma Shri Shahid Sable Charitra Granth was released by the state's Department of Culture. CM Fadnavis laid the foundation stone and inaugurated development works worth 1,352 crore rupees in Fulton. The focus is on irrigation, infrastructure and regional economic growth. The Neera Dioghar Right Bank Canal's second phase will enhance irrigation across Fulton, ensuring better water supply for agriculture and boosting farm productivity. Complementary infrastructure projects include road and bridge upgrades to improve connectivity, making it easier for local communities and businesses to move goods efficiently. Well, those were all the news updates we could pack for you in this edition of Maharashtra 360. Until next week, take care.
Welcome back to Buy Now Sell Now. You're catching us live from SBI Live Studios. But before we go ahead and get back to all your stock-related queries, let's take you through the key headlines that we're tracking this hour. First up, in more earnings to watch out today, Marti's Q2 is expected to see modest top-line growth led by richer product mix and higher exports. However, margins may stay under pressure. Shriram Finance is likely to report another steady quarter with AUM growth above 16% and profit up 8% YOY, while credit cost may edge higher. Strong loan growth and stable margins should help sustain profitability.
October Auto Dispatch estimates point to steady momentum in passenger vehicles with mid-single-digit growth led by Maruti and Tata Motors. Two-wheeler sales are seen largely flat while CV volumes stay subdued. Tractor sales may dip slightly due to festive timing shifts.
A much-awaited 7,000 crore Lenskart IPO opens for subscription. Backed by Piyush Bansal, the iCare major raised more than 3,200 crores from anchor investors, including global giants like BlackRock, Fidelity and Goldman Sachs. Remember, the IPO is valued at 235 times its trailing profit.
China has agreed to buy 12 million metric tons of US soybeans this season and 25 million tons annually for the next 3 years, according to Treasury Secretary Scott Bessent. The deal, following a Trump-Xi meeting, marks a major rebound in US farm exports after tariff tensions.
Welcome back, and a lot of earnings are trickling in, and let's put the spotlight on JBM Auto. This time the company did come out with a decent set, while in terms of the margins we have seen a bit of a decline. But what's the outlook going ahead? Let's understand that from Mr. Nishant Arya, Vice Chairman and MD of JBM Auto, joining us on the show. Hi Nishant, morning and good to be speaking with you. And firstly, help us with the factors that were at play for your numbers, and especially the reason behind the decline in your EBITDA on a YOY basis. What factors did impact your operational performance, and what's the outlook going ahead?
So YOY decline in EBITDA is not really there because the company has got 14.2% EBITDA in Q2 of FY26 vis-a-vis 13.6% in Q2 of FY25. And even if you see, the PBT is up to 5.4% vis-a-vis 5% in on YOY basis.
Sure. Nishant, on the margins front, margins expected to be sustained above 11% in H2?
Yeah, definitely. We would be looking at more than 11% EBITDA margins in FY26. Sorry.
Okay, sure. Revenue target for rupees 6,500 crores for FY26 is intact, or are there any changes there?
As of now, there is no revision because the sales are going strong. So definitely some of the sales got pushed out in September, courtesy the GST cut with the different manufacturers in the tier 1 area. And we are seeing that we should be recovering that in Q3.
All right, good to know that. But Nishant, help us with the current order book situation, and along with that, what will be the execution timeline?
So our current order book on the electric bus side is close to 10,000 buses, and we would be delivering this in the next 18 to 24 months.
All right, but Nishant, quite interesting development lately for the company, because just in October you signed a contract with Indian Army for electric buses, first major order from the Army. What's the visibility here? More such orders to flow in?
Definitely, we would be striving to see how can we meet the requirements not only of the Honorable Indian Army but also for the defense. Overall, the defense ministry and the defense forces of the country. And I think this order is a shot in the arm which clearly differentiates our organization vis-a-vis the competition, demonstrating our expertise on the EV ecosystem, which includes our electric electric buses, our lithium battery technology, charging technology, and the experience which has been clocked with more than 200 electric kilometers by JBM, which is not available with everyone.
Nishant, on the CESL tender front, will the company take part in the CESL tender, and if yes, how big?
No, so companies always participating in any opportunities which come by, and the respective teams would be working on that to see that how are we able to get the desired and targeted business which they foresee as relevant for them going forward. And if you see the track record of the company in PM E-Bus Seva 1 and PM E-Bus Seva 2, we have been able to garner a very substantial market share in both of these tenders as well, which were the last two tenders happening from the Government of India side.
All right, and lastly, Nishant, help us with the current capacity utilization, because we know that the utilization is quite much, but with respect to the order book inflow that you are getting to see, the visibility there, where are you standing in terms of the percentage?
So currently we are at about 15% capacity utilizations. We have a lot of headroom available, and we definitely foresee that it will be adding a lot of value and bringing that kind of outlook for us when we are having such a strong order book of about 10,000 buses.
All right, Nishant, thank you so much for joining us today and answering all of this question on the result front. Thank you so much. But then let's move on and let's get back to our viewer queries, which viewers are sending us on our WhatsApp number. And Narendra, let's take this question from Neha. She's from Bangalore, and she wants to know about Hindustan Copper and Ujjivan Small Finance. What should be the target expectation in 1 to 3 months?
See, as far as Ujjivan Small Finance is concerned, we do not have active recommendation on the stock specifically, but yeah, definitely the space NBFC is looking that the recovery is in sight, and shortly in next 1 or 2 quarters we see the positive recovery coming to the sector. And if you see, the overall traction is also building up, so the space is becoming quite interesting in terms of both valuation as well as the growth and recovery. If you see, the NPAs should start to come down, and the margins also we should see slight improvement, specifically post GST cut. The second order benefit would be coming to the NBFC sector. So for next 2 to 3 quarters, the sector is really looking for promising. And what was the other stock?
Hindustan Copper.
Yeah. Again, we do not have any active recommendation on the stock, but the commodity prices have largely went up, and that has been the positive for the stock. But since the kind of pace the prices have gone up, I think the prices should stabilize from here onwards. So I think the stock may not perform in short term. So if it's a long term view, then they can continue to hold. But right now, I think the prices should stabilize from here onwards.
Now I'll quickly come to you. A view for 1 to 3 months. What's a target that you can give, Neha?
So I think both, the stocks to me look attractive. Ujjivan Small Finance Bank, I would probably place a target closer to 58, 59, thereabouts. The stock currently is around 52 odd mark. Looks very attractive on the longer term setup. And I think the stock has come back into a huge recovery after I think, if I'm not wrong, there was like a 4-quarter or 5-quarter consistent sell-off into the stock price, and it's managed to recuperate most of the losses from that sell-off. So I think in that sense, it looks to be a very attractive stock. I'm not sure if you can increase your time frame from 2-3 months to say 12 months or so, and give the stock a lot more time to try and perform. Even that would be the case with Hindustan Copper. I think the stock is heading towards an excellent breakout. Been bullish on the entire metal commodity theme, and I strongly believe that we are looking at a point where many of these commodity stocks could restart a major multi-year uptrend. Hindustan Copper could be amongst the top name in that mid-cap category from the entire commodity/metal theme. So would be bullish on Hindustan Copper also.
All right, let's watch out for that. But Kunal, the next query is specifically for you, coming in from Sanjay. He wants to know your take on a couple of counters and wants to know any of the stock you like to enter a fresh long position. Stocks like Dixon Tech, L&T Foods, CAMS as well as LG Equipments is something that he's looking forward to.
See, I think Dixon Tech is a very interesting chart because from 18,500 to 15,500 thereabouts, that's a very interesting name to look at. The stock has gone through a major correction. Seems like that on the weekly charts, the indicators are coming into an oversold territory. So that could be a decent bet if you're looking at, and we've seen the pedigree of the stock on the longer term charts also. LT Foods, on the other hand, I would still suggest a wait. I think 380 could be a decent level for the stock in terms of a retest, and there could be a possibility that the stock may go into a retest pretty soon of that kind of a support. Even for LG Equipment, I think 460, 465 could be a decent support. In case if the stock happens to retest closer to the support points, that's where I would suggest to go for a buy.
So these are recommendations from Kunal. But then we have a live viewer from Bangalore, Yogesh, connected with us. So Yogesh, hi, morning. Welcome to the show. Thank you so much for sending us your question. Praj Industry, is that right, that you've bought?
Yes.
Sure.
Hello, good morning.
Hi.
It's Praj Industry and also IDFC First Bank.
Okay.
I hold Praj Industry at 480 and IDFC Bank at 77. So I'm ready to wait for the next 1 year. So
1 year.
I want to have a outlook on it.
Sure, sure. Narendra, would you like to help?
Yeah, definitely. IDFC First Bank, we are very positive on the bank, and you can continue to hold. If you see, the AUM growth has been really satisfactorily for this bank, led by retail and SME, and corporate segment is also gradually picking up. So you can continue to hold IDFC First Bank for medium to long term.
All right, so that's the take coming in, a hold on IDFC First Bank as well. All right, time for, with that, it's time upon buy now, sell now. And thank you so much, Kunal and Narendra, for taking time out and helping our viewers with their stock-specific queries. But then for our viewers, you don't have to go away. In the latest edition of the interview with Aisha Faridi, global investor Vikas Parishad of MNG Investment shares his perspective on where the next wave of market opportunity lies, from technology to public policy. He explains why global equities may still have room to run and why Asia remains at the heart of the story.
If you look at policy when it comes to pharma names here, or you look at the defense sector in Europe and in India and in Japan this year, public policy, demographics, technology all coming together to drive opportunities in the short to intermediate term. Also, what I would say in the long term, one of our foundational beliefs is that markets will continue moving higher because they have to. So if you look at the Value Up program in South Korea, the corporate governance transformation underway in Japan, the fact that Xi Jinping is now allowing entrepreneurs to make money in the markets to go higher and higher in China, it's because we don't have very many mechanisms for people to preserve and then grow their wealth. The stock market is the best way. I know in the short term there are concerns about AI bubbles or valuation multiples in the short term. But our view is that for many reasons, including demographics, markets will keep going higher because they have to.
Why do you say they have to? I mean, there have been periods of extended and long bear markets as well. Cases in point like Japan, or for that matter, China, took very, very long to come back from the COVID lows. So why do you believe that we're in a structural upswing in equity markets and that this is going to continue?
It will continue. It might not be any one. Not all markets will move uniformly.
Sure.
So we've seen that this year. Look at the wides of India versus emerging markets, India versus developed markets. By the way, that's improving the setup into 2026. We can talk about that later. It's a little bit too early to talk about 26, but India's setup heading into next year is looking pretty good. And so we've seen dispersion this year, but overall, tech will drive it, policy will drive it, defense sector, infra spending, education, healthcare. All these sectors are going to drive equity markets higher because that's where the growth is. And this is a great home, a great time for active stock picking as well, whether it's at a country-wise allocation level. Coming into this year, we were underweight India. In our India strategies, we've been fully deployed, but relative to the bottom-up opportunities we saw in Japan, in South Korea, in Europe, in China, and Hong Kong, we thought that it served us better to have more capital allocated there. So not every market will move together, but the trend is clear to us. It's going to be higher. I could have stayed home in the US and invested in that market. I could have picked a different asset class. I've chosen to do public equities in Asia with a focus on India because I think that's where the money is.
So let's talk about first back home, or the earlier home, the US. And there too, you're seeing a concentration of the Fab 7. That's where the earnings growth is, and that's where all the equity money is finding its way. I mean, you know, we often joke about as to how their quarterly profits are larger than GDPs of a few countries. Do you think that concentration or that fear of the tech bubble, like you rightly highlighted, is unfounded? Or do you sense that not for too long will the Fab 7 remain as Fab?
So it's a fair question. It's something that we think about. I do think that the Fab 7, Mag 7, whatever you call it, that cohort will change over time. Number one, if you look at the number of trillion-dollar companies in the world, aside from Aramco in Saudi Arabia, there aren't any that are outside the US. There will be a trillion-dollar market cap company in India someday. I don't think it's listed yet. I don't see it among the current companies, but we'll stay focused on the US for a moment. We have shifted from the top-line earnings growth story being the solo driver of the Big 7 or the Mag 7, Fab 7 in the US to now they're spending a lot of money. What we are looking for are the beneficiaries of that spend. So I think when you look beyond the biggest 7, if you just focus on the top 4 hyperscalers, for example, they've gone from spending $5 to $10 billion a year each to approaching $100 billion each. Now, they need a return on that. Higher returns are probably available for where that money is going. So whether it's semiconductor chips, whether it's memory, and we've benefited from that this year, power, cooling. There's so much focus on AI and advanced computing these days. Our focus is on how are you going to power this? New chip architectures, cooling architectures. And so when you look at that, there will be some very large companies that come out of that, and that's where we're looking.
But do you sense that the investment theme, at least in the US equity markets, will revolve on around AI and tech?
Yes.
And there's no other way?
Yes, yes. I see that it's not going to be services companies. I don't think it's going to be retail. I don't think it's going to be defense or healthcare. There's pressure on those sectors in the US. It will be led by tech. And more hardware than software. We see that continuing. I think software is in a difficult position. If you look at, it's not just the Indian IT services companies or the US IT services companies. More broadly, software is under pressure. You and I could have started learning coding in high school or college. Many of those skills would be obsolete today.
Yeah. C++.
Yeah, same. Well, I'm even older, so different languages. But yes, you don't need that today. You don't. Everybody's doing vibe coding these days, and people. That's where the money is. But hardware is very important, and I think still, despite the hype that we've seen, not enough attention is being paid there. The current chip architectures that we have, the current power infrastructure that we have, will not let us get to where we need to be in 5, 10, 15, 20 years. And for that,
why do you say that?
Well, as we were talking offline just before we started, if you look at the first iPhone that came out, 4 GB at the low end, the current one, some of us have the newer one, 2 terabytes of storage.
You do.
I do.
I'm the orange.
I have the orange one.
Yeah.
I have the orange one. It's a little bit bright for my taste, but why not? A little bit different. But from 4 GB to 2 terabytes in one device, that's 500x in 18 years. Then you look at the DRAM that is powering that, the high-speed memory, that has gone up by multiples. If you look at high bandwidth memory, the AI servers, the needs are growing exponentially, but the capacities are growing linearly, which is why then you've seen pricing go up so much. You've seen the memory companies in the US and in South Korea, the earnings expectations over the past 2 years for several of these companies have gone up by 5 to 7x, all largely driven by pricing, because the capacity is not meeting it. The demand is so high. That's just memory. If you're going to have new chip architectures, you need more equipment. And as you have more equipment and you have more devices consuming power and computing data, then you need more energy, more efficient energy systems, so power semiconductors. Many of those companies are in Japan, Germany, and the US. And then cooling also, new cooling technologies will be needed. So when you have demand growing exponentially, capacity growing linearly, then in the short term, you're going to have these huge spikes in pricing. But in the long term, you need new technologies to keep up. And that's what we're looking at.